note down this type. Right? Don't rely on recording because there can be a situation where there can be technical issues, right? Don't rely on this. Now, if you have any question, you should ask me. Any questions? Any questions up to now? Then the third one is cash flows from financing activities. You can remember, these are related to equity and non-current liabilities. Now you see that in your statement of financial position, you come to the equity part. You come to the equity part. You see, equity includes stated capital, retained earnings. Retained earning changes we have already taken. You can remember, retained earning changes includes a dividend payment. So that's financing cash flow. Stated capital, you see, unchanged. Now, from the retained earning changes, we have a cash flow dividend. Dividend. You can remember at the beginning, we analyzed the retained earnings. The change in the retained earnings we analyze. So we see a dividend payment. How much dividend payment? You see the previous calculation. How much dividend payment? You see interim dividend paid 150,000. Interim dividend paid 150,000. So dividend payment 150,000. Cash outflow. There is no changes in equity shares. So if the equity shares were issued, then equity stated capital equity shares should have increased. But in the statement of financial position, you see stated capital equity shares unchanged. You see stated capital equity shares unchanged. Then there is no issue of shares. Then look at the non-current liability. Look at the non-current liability. The company has issued, debentures. There are no changes in debentures. So no debenture issue. Then there is no cash inflow outflow. But long-term loans, you see long-term loans, the long-term proportion of the loans, you know the loans you classify under non-current liabilities and current liabilities. So that's your financial statement knowledge. Amount payable within a year, you classify under current liabilities. Amount payable after a year, you classify under non-current liabilities. Now see the total loan. At the beginning, how much total loan? 780 plus 180. Total loan 960. At the beginning, total loan value 960. How much total loan value at the end? 930 plus 170. At the end, total loan value 930 plus 170. How much? 1100. Now you see loan value increases from 960 beginning to 1100 at the end. Then you have net borrowing or net repayment. Loan balance increase. So net borrowing. So net borrowing, how much? The difference, 140. Right. So 140. So no loan values increases by 140. So that's a cash flow. That's a cash flow, cash inflow. So I have recorded it separately. So long-term loans increases by 450. Repayments of short-term loans 310. Or you can include this as 140 cash inflow. So you can record this as 140 cash inflow, net increase in loan, or you can record separately. So here I have recorded separately. You see long-term loans increases, you see long-term loan value increases from 780 to 930. Then how much increase? 780 to 930. How much? Long-term loans increases from 780 to 930. 150. Short-term loans decreases by 10. Right. So there's a mistake in the answer. Long-term loans should be 150. Short-term loans should be 10. The net increase 140. Net increase should be 140. So long-term loans increase by 150. Short-term loans decrease by 10. So net increase is 140. Net increase is 140. Right. Then net cash flow from financing activities. How much net cash flow? 150 minus plus 150 minus 10. Net cash flow is 10. Net cash flow is 10. You see minus 150 plus 150 minus 10. Net cash flow is 10. Then you take the total of the three types of cash flows. How much total? Operating cash flow positive 3025. Investing cash flow negative 2600. Financing cash flow negative 1100. Then you see the total. How much total? 450. So we call it. Now these terms are very important. We call it net increase or decrease in cash and cash equivalent. We call it net increase or decrease in cash and cash equivalent. So that is the total of three types of cash flows. Operating cash flows, investing cash flows, and the total of financing cash flows. Then you take the beginning cash and equivalent balance. You see the financial statement? The beginning cash and cash equivalents. You see cash and equivalents. Beginning 2180. You take the beginning cash and cash equivalent 2180. And with the net increase or decrease in cash and cash equivalent, then 415 plus 2180, you get 2595. 2595. You see 415 plus 2108, you get 2595. That is cash and equivalents at the end. Cash and cash equivalent at the end. So this imbalance should be equal to the imbalance in the statement of financial position. You see, cash and cash equivalent at the end, 2595. Cash and cash equivalent at the end, 2595. So you can check whether you have correctly prepared the cash flow statement by comparing the cash and cash equivalents in the financial position with the cash and cash equivalent you get from the statement of cash flows. So if end balances are the same, that indicates you have correctly prepared it. Right. Any questions? Any question? So I have simply explained how it's prepared. The course material you have work example with explanations. You can practice by yourself. Any question you have? Right. Then we can move on to our next lesson. Accounting for not-for-profit organizations. Right. So let's have about 5 minutes break. So after about 5 minutes, we'll start this session. Right. So let's start our session 5, accounting for not-for-profit organizations. Right. So these organizations, the objective is not to make profits. It could be a social welfare, promoting sports, welfare of the community. So likewise, their motive is not to make profit, but some other aspects. For example, charities, sport clubs. A sport club motive is to promote sports. So we are going to study the financial statements for these kind of not-for-profit making organizations. So in the post material, I have explained very clearly. You see a point number 5.1. You can find out the differences between profit-oriented organizations and non-profit-oriented organizations. Right. So in these kind of organizations, the main income source is members' contributions, members' subscriptions, or simply membership fees. So I have explained here accounting for membership fees. There are two types of members. Right. Some members pay membership fees annually. And some members pay membership fees once for a lifetime. We call them lifetime members. Right. So here you can study how to account for annual membership fees and how to account for lifetime membership fees. Right. So all these are explained in with examples. In addition, these kind of organizations receive donations. So I have explained here accounting for donations. Donations are also two types. There can be donation commonly made by members or the people. For example, now when you go to temple, you donate 100 rupees, 200 rupees, 500 rupees for running the temple, like paying electricity bills, water bills, right? Those are general donations. Sometimes you donate for a specific purpose, like constructing a building. Those are specific donations. Specific donations. So I have explained here accounting for general donations and accounting for those specific donations. You can study, I have explained with examples. Right. Then I have explained the financial statements for not-for-profit organization. Right. Now let's have a comparison between financial statements of profit-making or profit-oriented organizations and not-for-profit organizations. In profit-oriented organizations, in businesses, the financial statements include 5 components. You have already studied that. In businesses, Financial statements include statement of income, statement of financial position, statement of cash flows, statement of changes in equity, then accounting policies and notes, simply notes. Notes describe or notes provide more details on the values given in the other statements. Right. Let's see financial statements of not-for-profit organizations. So like statement of income, in the statement of income, you record income and expenses. Similarly, these organizations prepare statement of income and expenditure, or simply income and expenditure account. You can say statement of income and expenditure. So this records income and expenses, similar to statement of income. Similar to statement of income, statement of income and expenditure records income and expenses. So if you present this as an account, we call income and expenditure account. Income and expenditure account. So if you present it as an account, you can say income and expenditure account. If you present as a statement, you can say statement of income and expenditure. Right. Then statement of financial position. Similar to businesses, not-for-profit organizations prepare statement of financial position. It prepares statement of financial position. So in businesses, you can remember financial position include assets, liabilities, and equity. This includes assets, liabilities, and equity. But here you have assets, liabilities, not equity. We call it accumulated fund. Only the difference is the term. In businesses, we call it equity. But here we don't use the term equity. We call it accumulated fund. Accumulated fund. So this is the only difference in the statement of financial position. Right. So we are going to work out one question, then you can understand those. Then in the statement of cash flows, so similar to businesses, these organizations prepare receipts and payment account. Receipts and payment account. You know, in the statement of cash flows, you have cash receipts and payments, cash inflows and outflows. Similarly, non-profit organizations prepare receipts and payments account. Receipts and payment account. Right. Then statement of changes in equity. You know, equity is the owner's capital. So in the statement of changes in equity, you show the changes in owner's capital. Changes in owner's capital. But in not-for-profit organizations, owners are the members. So members contribute the organization by paying membership fees. That can be annual, that can be a lifetime membership. Right. So members contribute the organization by paying membership fees. Now to show that, you have to prepare membership fees account. Membership fees account. So if you are having lifetime members, you have to show it separately. Lifetime membership fees from, you have to show separately from annual membership fees. Annual membership fees. So you prepare a membership fees account. In addition, you have to present notes. You have to present notes to give more details of the items recorded in these statements. Now you see there are similarities and differences between financial statements of businesses and financial statements of not-for-profit organizations. So with this, you can understand similarities and differences. Now, what are the similarities? Statement of income and statement of income and expenditure is almost similar. Only the way of presentation is the difference. We are going to study that. Statement of financial position, assets, liabilities almost same. The presentation is almost same, but in businesses you show the equity, but in not-for-profit organizations you are going to show accumulated fund. Accumulated fund. And the other difference is statement of changes in equity. So you are going to show changes in equity. But in not-for-profit organizations, owners are the members. You have to show the membership fees accounts. Membership fees accounts. So likewise, you can understand the similarities and differences. Right. So we'll work out one question. So with that, you can enhance your understanding. Right. So I have uploaded this question, this practice question in your LMS. It was long time ago. You would have downloaded this. Now open this question. I'm giving about 3 to 4 minutes. You go through the entire question. So you have this soft copy. You go through the entire question. Right. Let's start up. You know the components. So you have to prepare statement of income and expenditure. So in the financial statements, that should include statement of income and expenditure, statement of receipts and payment or receipts and payment account, membership fees account, statement of financial position, and if necessary, notes. Now you see receipts and payment account is given. So out of this statement, receipts and payment account is given. This is given. Now you see, you start with the beginning balance. Receipts are debited, like cash account. Payments are credited. You see, payments are credited. Then you have the end balance. So receipts and payment account is like cash account. This is like cash account. Receipts debit, payments credit. You have the end balance. Then you see some additional information. Now you have to carefully go through this. Additional information. You see, annual membership fee is 5,000. Annual membership fee is 5,000. Currently, there are 100 members in the club. Receipts for membership fees during the year includes the following. Now, currently, 100 members are in the club. This is how you got membership fees during the year. Now, you see total 600,000. You see in the receipts and payment account, membership fees received 600,000. Now, you see 600,000 includes 50,000, you see, amounts due as at 1st January 2023. Now, according to the question, our financial year ending, you see, 31st December 23. You see, according to the question, financial year end 31st December 23. Then financial year beginning 1st January 2023. Now, as at 1st January, we had some receivables from members. As at 1st January, we had membership fees receivables. Sorry. During the year, you have received 50,000 for that. During the year, you receive 50,000 for those receivables at the beginning of the year. Then 80 members paid for the year, 400,000. 30 members paid for, you see, 2024, 150,000. So 30 members paid for the next year. So when you prepare a membership fees account, you have to use these amounts. Then you have details of property, plant, and equipment. Details of property, plant, and equipment. You see sport equipment purchase on 1st January 23. You see, there are sport equipment, you see, in thousands, hundred. According to the question, they were purchased So it was purchased on 1st January 2023. Then you have information on bank loan. You have information on bank loan. Then playground is provided to outsiders for a rent of 10,000. So your playground has been rented out. During the year, so 10,000 per event. Playground rent is 10,000 per event. During the year, 10 events were held. Then you should have received how much? 10,000 per event. 10 events were held during the year. So you should have received during the year playground rent income 100,000. Now let's see you received that. Rent income you received only 75. Now you see, you should have received 100,000 as rent income, but you received 75. Then how much receivable? Only 75 received out of 100. Then 25 is rent income receivable. Rent income receivable. Right. So this has to be adjusted. So you have a receivable income receivable. This has to be adjusted when you prepare financial statement. Right. Then you have a cost of stationery. Cost of stationery inventory. You see on 1st January, you had 1,600 inventory. Out of that 100 inventory utilized. So this 100 should be the expense. So you have some stationery. Out of that 100 is utilized. That should be the expense. Then you see special donations. You can remember donations are two types, general and special. You see special donation has been received for modification to the auditorium. Now your club is modifying the auditorium. For that, you receive special donation. Right. You see the receipts and payment account. Special donations, you see 500. So this is for modifying the auditorium. Modifying the auditorium. Right. Now you have a basic idea about the situation, the question. Right. Now we can prepare the financial statements. Receipts and payment account is already given. So you don't need to prepare it again. So you have to prepare income and expenditure account, membership fees account, statement of financial position, and if necessary, notes. Right. So let's start with membership fees. Let's start with membership fees. Right. So when you prepare membership fees account, so it has already been in the answer, but I'll explain. Right. So it can include both debit and credit balances. In the membership fees account, So here we have only annual members. So this account includes both debit and credit balances. Now, for example, if there's a membership fees receivable, so receivable is an asset, then there should be a debit balance. So at the beginning, there should be a debit balance. At the end, there should be a debit balance. This is for membership fees receivable. But there are situations members pay fees for the next year. This year you pay for the next year. So this year that becomes a liability. So in your club that becomes a liability because a member has paid for the next year. Member has paid his fees in advance. So there should be a liability, so credit balance. So at the beginning there can be a credit balance. At the end there can be a credit balance. Now see whether you have those balances. You see whether you have those balances. Now you go through the question. You see the membership fees received. You receive 50,000 for an amount due on 1st January. So there would be a balance on 1st January, 50, a receivable balance. During the year, you receive 50. So there should be 50 balance at the beginning of the year. There should be a 50 balance, receivable balance at the beginning of the year. For that you receive during the year. In addition, you see, members paid, you see, 150 for the next year. So asset or liability, you pay for the next year. You pay for the next year. So from the sport club point of view, this is a liability. This is a membership fee received in advance. So 150 is a liability. So credit balance at the end of the year. So this has to be a credit balance at the end of the year. Then you see fees received for the year. Now this is important. Fees received for the year 400. You see, membership fees received for the year 400. How much total receivable? You have 100 members, 5,000 per member. Then how much total receivable for the year? 5,000. So 5,000 per member into 100, 500,000. Total receivable for the year, 500,000. But you receive 400,000. Then how much receivable at the end of the year? 500,000 total receivable, but receive only 400,000. Then 100,000 is receivable at the end of the year. Is it clear? 100,000 is receivable at the end of the year. So this 100,000 is a receivable balance. Receivable balance at the end of the year. This 100 is receivable balance at the end of the year. Right. Likewise, you have to find out those balances from the given information. Then you record the membership fees received and receivable, the total income, how much received, membership fees received, you see 600. Total for the year 500, that's your income. So membership fees received, receipts and payment account debit, membership fees account credit from receipts and payment account. $600. The total membership fees for the year is income that goes through the income and expenditure account. So 500, membership fees account debit, income and expenditure account credit. Then your account should automatically balance. You see debit total 700, credit total also 700. You see account is balanced. Right. So you first find out the balances at the beginning and end, both debit and credit balances. So after recording the balances, you record the amount received, 600, and total for the year as income. Total for the year as income. Then your account should have balance. Right. Any questions? Any questions? So total income for the year 500. That you have to take to the income and expenditure account. Any question from membership fees account? Any question? Then we can move on to the sorry, income and expenditure account. We can move on to the income and expenditure account. So you have to find out the income during the year and expenses for the year. You can prepare it as an account or as a statement. So in the answer, I have given it as a statement. Statement of, you see, statement of income and expenditure. Or you can prepare this as an account like this. Income and expenditure account. You can prepare as an account. Right. So let's prepare as an account because you have the answer as a statement. Right. So when you prepare it as an account, on credit side, you record income. On credit side, you record income. On debit side, you record expenditure. On debit side, you record expenses. Now we know the membership is income. We know the membership is income. You see from the membership fees account, you see annual total income is 500. So how do you get 500? You see the question? You had 100 members. You see the question? You had 100 members. Membership fee is 5,000 from one member. Then 5,000 into 100, 500,000. In thousands, 500. So that is the total income for the year. Total income for the year. Right. 500. So all these are prepared in thousands. Then you see what else we have. What are the other income we have? Right. You see you have rented out playground. You see you have rented out playground. The rent is 10,000 for one event. During the year, 10 events were held. Then how much total income? 10,000 into 10, 100,000. So rent income should be 100,000. So we have another income, rent income. 100. What else? You go through the question. You see a donation received for the modification of the auditorium. Donation received for the modification of auditorium. You see, donation received for a particular purpose. This is not a general donation. This has been received for a particular purpose. Auditorium modification. Therefore, this is a special donation. So if it is general donation, you can take it as an income. You can take it as an income. Now this is special donation. So you can't straight away take it as an income. You can't straight away take it as an income. Right. So what you do is you take to a separate account as a fund. Right. For example, auditorium modification fund. Right. So you take this special donation to a separate account. Right. You can say auditorium modification fund. Auditorium modification fund. See how much donation received. You see special donation 500. Right. So you credit auditorium modification fund 500. So this is how you record special donation. You can't straight away take to income. But if it is general donation, you can take to income. Right. You see from the debit side of the receipts and payment, we have considered membership fees, rent income, donation. Then you have Revenue from tournaments. Right. 150. Revenue from tournaments. 150. So that's your income. So tournament income in your income and expenditure account. Tournament income 150. Right. So your income values are okay. Then you have to take the expenses. Now see whether any additional information relating to expenses. We completed number 1, membership fees. Number 2, you can calculate depreciation. So you have details of property, plant and equipment. You can calculate depreciation. You see a depreciation on straight line basis, rates are given. Motor vehicle depreciation, 10%. You see motor vehicle cost 500, 500 into 10%, 50. You can calculate depreciation. Then auditorium, 600 cost, depreciation 10%, 600 into 10%, 60. Sport equipment, 100. Sport equipment purchase 1st January. At the beginning of the year. So we can give the annual depreciation, 20%. So 100 into 20%, 20. Then total depreciation, you see, 130. Total depreciation, 130. So depreciation, you can take on the expenses. So 130 depreciation, you can take on the expenses. Right. So we have completed now number 2. Then number 3. You see number 3. That's about bank loan. A bank loan of 750 was obtained on 1st June 22 last year. Last year, yes. Which was given a grace period of 2 years for the capital repayment. Now, for the first 2 years of the bank loan, you don't have to pay capital. You have to pay only the interest. The accrued interest on the bank loan as at 31st December 23 is 50. So during the year, you have not paid 50 interest. 50 interest. Then how much interest for the year? You have not paid 50 interest. See how much you have paid? See how much you have paid? See how much you have paid in interest payments. You see the receipts and payment account. There are no interest payments. So you have not paid any interest. So by the end of the year, total interest is accrued. Then what does it mean? That 50 is the total interest for the year. So under expenses, bank loan interest 50. Under expenses, bank loan interest 50. Bank loan interest 50. Right. So number 2, 3 also completed. Number 4 completed. Number 5. You see number 5. So on 1st January, you had inventory stock 1,600. During the year, 100,000 inventory utilized. So that should be your expense. So stationery expense should be 100. Stationery expense should be 100. Stationery should be 100. Right. Then donation we have taken. Now see the other expenses. Electricity 60, maintenance 75. Now those we have not taken. Ground staff fees 80. Electricity, maintenance, ground staff fees. So under expenses, electricity, $60, maintenance, 75, ground staff, 80. Ground staff fees 80. Purchase of equipment. Now there's a equipment purchase. So what is that? That can be sport equipment. You see, sport equipment purchase 1st January, 100. So that is the sport equipment you purchase. Right. So that we have considered in the depreciation calculation. Auditorium modification, you see expenses 150. You see auditorium modification, expenses 150. So you can remember, now this is important. You received a special donation for that 500. You see, for the auditorium modification, you receive special donation 500. Then what happened was, we have taken to a separate account 500. We have taken to a separate account 500. During the year, you have modified auditorium. So modification cost. Modification cost 150. So out of 500, you spend 150 to modify the auditorium. Now still modification is in progress. You have not completed the modification. You see the question? The modification is expected to be completed. You see, it's given. You see, modification is expected to be finished by 2026. So during the year, you have spent 150 to do the modification, but still that is in progress, right? So this modification cost, you have to take to capital work in progress account. Capital work in progress account. Because this is a capital work. This is a capital expenditure. But still you have not completed the modification. So until you complete the modification, these modification expenses are accumulated to the capital work in progress account. Right? So this is debited to capital work in progress account. Then an amount equal to this modification cost, you can take to your income from the modification fund. Now this is how you account, how you take the donation, special donation to the income. When you receive the donation, you take to the fund. Then you see by the end of the year how much you spent out of that. Now you spend 150 out of this. So an amount equal to this amount spent, 150, you can take to the income. You can take to the income and expenditure account. Can take to the income and expenditure account. So 150 goes to income and expenditure account. So under income, 150. Under income, 150. So this is one accounting method. This is not a rule. So in accounting for not-for-profit organizations, there are different accounting practices. There are different accounting practices. This is one way of accounting special donation. So 150 is from auditorium modification fund. Auditorium modification fund. Right. Now you see, in the statement of income and expenditure I prepared, so I have not included that. Right. I have not included that, but you can include it. You can include it. Right. This is not a like stamp. Right. There are different accounting practices. Right. So there are organizations which account a special donation like this. First, it's credited to the fund account, then expenses are incurred, and amount equal to the expense incurred, you take to the income. From the fund, you take to the income. So this is not compulsory to do that. This is not compulsory. There is no standard for that. But this is one practice. This is one practice. Right. Right. So we have considered all the expenses. All right. One more. We have a fuel 50, coach fee 75. So we have two more expenses. Fuel 50 and coach fee 75. Two more expenses. Fuel and coach fee. Coach fee. Fuel coach fee 75. Right. So we have considered now all the expenses. Now see whether expenses higher than the income or income higher than the expenses. You take the total income. Total income is 900. Total income is 900. How much total expenses? Total expenses. You can get the total. How much? Total expenses.
620.
620. You see income higher than expenses. How much difference? 200. 280. Yes. 280. So if it is in a business, you say profit. But this organization is not for profit organization. Then you can say this is not profit, this is surplus. Surplus. You can't use the term profit because our organization type is not for profit organization. If the income expenses higher than income, in businesses we call loss. But here we call deficit. Deficit. Right. So surplus and deficit. So here surplus 280. Surplus 280. Any questions? Any question from the statement of income? Then you have to prepare statement of financial position. Statement of financial position. Same as profit or same as businesses. You see only small difference. This is same as for businesses. Statement of financial position. As at 31st December 2023 in thousands. You can take assets, non-current assets. So under that, property, plant and equipment. You can show in a note like the one prepared for companies. You can remember when you prepare financial statements for a company, you prepare the state profit, plant and equipment note. Similarly, you can present this as a note. You can present this as a note. So let's say note number 1, profit, plant and equipment. Then the carrying value, total carrying value, you can take here. Right. Now, how much carrying value? You calculate. You see, we have property, plant, and equipment here. How much carrying value? Total cost. You see, total cost 1,700. Total cost 1,700. Accumulated depreciation at the beginning only 250. Depreciation during the year 130. Then how much carrying value at the end? 1,700 minus depreciation. 1,700 minus 250 minus 130. How much? Carrying value? How much? Carrying value? 1,320. 1,320. So plant and equipment 1,320. So that value is coming from is like you want prepare you for companies. You can have one column for each playground, sport equipment. Likewise, you can have separate columns. You can remember we prepare these for companies. Then costs. After that, depreciation. Then finally, you find out carrying value. The total carrying value is 1,320. Total carrying value is 1,320. Right. Have you got the idea? You can prepare this note. You can prepare this note. Right. In addition, we have capital work in progress. You see, modification is still going on. That is capital work in progress. So we had a separate account. You take the balance in that account. You see capital work in progress, account balance 150. Account balance 150. So under non-current assets, capital work in progress 150. Then current assets. We have stationary stock. So one moment, please. Right. We have stationary stock. Stationary stock, you see the how much stationary stock? You see, 1st January you had 1,600. Out of that, 100 utilized. Then how much stock at the end? 1,600 you had, 100 utilized. Then stock at the end should be 1,500. So stationary stock at the end, 1,500. In addition, you have membership fees receivable. Membership fees receivables. How much receivable? You see membership fees account receivable at the end of the year. You see 100 fees receivable at the end of the year, 100. In addition, you have rent receivable. How much rent receivable? You see, the playground was rented 10,000 per event. 10 events were held. Then total rent income should be 100,000. But how much you received? You see, you received 75. 75. Then 25 is receivable. So rent receivable 25. Right. So we have two receivables, membership fees and rent. Membership fees receivable 100. Rent receivable 25. Then we have cash. How much cash? You see the receipts and payment account. Cash balance 835. Cash balance 835. Cash balance 835. Now you can get the total assets. Total assets. Then equity and liabilities. So here we don't use the term equity. So you take the accumulated fund. Accumulated fund. So you have to calculate it at the beginning of the year. 1st January 23. Then surplus is added here. Then you get the accumulated fund at the end. As at 31st December 23. Accumulated fund at the beginning, you calculate from assets and liabilities at the beginning. You calculate from assets and liabilities at the beginning. So you take beginning assets and liabilities. The difference is accumulated fund at the beginning. So take those assets and liabilities at the beginning. Right. So let's go through from the question from the beginning of the question. So you see cash balance 100 is there. At the beginning, cash balance 100. At the beginning, membership fees receivable 50. At the beginning, you had playground, motor vehicle, and auditorium. Sport equipment you purchased during the year. Then at the beginning, you had how much property, plant, and equipment? Playground, motor vehicle, auditorium. The cost of the property, plant, and equipment at the beginning, 1,600. Playground, motor vehicle, auditorium. Accumulated depreciation at the beginning, 250. How much beginning carrying value of the property, plant, and equipment? Cost minus accumulated depreciation. 1,600 minus 250. 1,600 minus 250, 1,350. 1,350. Sorry. What else? You see, at the beginning, you had a bank loan, 750. What else? At the beginning, you have a stationary stock, 1,600. So you take those beginning assets and liabilities. Beginning assets and liabilities. So let's take the assets, property, plant, and equipment. Carrying value, we got 1,350. Cash balance 100. Stationary 1,600. Membership fees receivable at the beginning 50. Liabilities, bank loan 750. Bank loan 750. Right. Total assets, how much? Total assets, how much? Is it 3,100? Total liabilities, 750. Then accumulated fund at the beginning, 2,350. So at the beginning, accumulated fund, 2,350. Then we have surplus, 280. You see, during the year, surplus, 280. So surplus is added. Then you get the accumulated fund at the end. How much? 2,330. Then you
2,630.
Yes, thank you. 630. Then you take that auditorium modification fund balance. Auditorium modification fund. You see, we had a separate account. You see how much balance? 500 credited, 150 debited. Then the remaining balance, 350. Remaining balance, 350. Right. Then you take the liabilities. Non-current liabilities. We have bank loan. Now you see question says repayments have not been made. Capital repayments starting from the next year. Then the balance at the end same as balance at the beginning. During the year you make only the interest payments. Then balance at the end same as balance at the beginning. Then current liabilities. See how much current liabilities? See how much current liability? You see 30 members paid membership fees for the next year. You see your membership fees account. There's 150 balance at the end, a credit balance. So current liability. What else? Accrued interest, 50. That's also current liability. So those are the two current liabilities. Those are the two current liabilities. Accrued interest and membership fees received in advance. Membership fees received in advance, 150. Accrued interest, 50. Now you can get the total accumulated fund and liabilities. You can get the total accumulated fund and liabilities. Right. Any question? Anything you want me to clarify? So you need to practice this question and the questions and answers given in your course material. So in the course material, everything is very clearly explained. Right. So you have to study and practice the given questions. Right. So before the next session, I'm going to upload some model questions because this is the first time this subject is offered. There are no past papers. So I'm going to upload some model questions to give you an idea about the paper structure. Don't expect same questions, similar questions in the exam paper. So with the model questions, you can understand the structure of the paper. How questions are raised or given in the exam paper. Which kind of questions given, whether theoretical questions given, calculations are given. Right. So to understand the structure of the paper, so I'm going to upload some model questions. So before the next session, you should work out these questions. You should work out these questions and come with the answers. And you know the quiz has been scheduled. Right. Have you got the message? So I have given in the announcements. Right. So you have to get ready for the quiz up to this lesson. You have to get ready for the quiz up to this lesson. Right. So up to not-for-profit organization lessons. The quiz is covered entirely the unit 1. And in unit 2, up to the session 5. Up to the session 5, not-for-profit organization. So quiz covers all 8 sessions in unit 1 and first 5 sessions in unit 2. Right. So you have the relevant information. So you should get ready for the quiz. Right. So if you miss the quiz, there is no alternative. Right. So you have 2 days. So you should attend one of these 2 days for the quiz. Right. There are no alternatives. Now, from now, you can get ready for that. Right. If you don't have a computer, you can get ready computer because it was announced at the beginning of this month, even before the beginning of this month. So you have enough time to organize the relevant equipment, especially a computer. You can't do the quiz in the mobile phone. So you should have either laptop or desktop. Right. So you get ready those and you attend the quiz during the given time. Right. So is there anything you want me to clarify? Is there anything you want me to clarify? Just to remind you, quiz is on 4th and 6th October. So you have to attend either 4th or 6th October during the given time. Quiz is open during the given time. Right. So all the instructions are in the announcement. And only one attempt is allowed. Now let's say, for example, you attended on 4th. Then you can't attend 6th again. Only one attempt is allowed. Only one attempt is allowed. Right. So is there anything you want me to clarify? Right. Then we will meet next time. See you next time.